Reportedly postponing its planned robotaxi event. The delay, which would push the reveal from next month to October, leaves the stock as one of the biggest losers in the S&P for the week, although it's still doing quite well for the month. Our next guest calls it a non-event, believing the EV maker stock is going to double. Joining us now, Deepwater Asset Management's Gene Munster. Gene, why is it a non-event? I mean, if there's any history here, it's a history of delays and of unfulfilled promises when it comes to full self-driving.
The history is the reason why this is a non-event is that they occasionally postpone their actual events. Keep in mind, Elon kind of did this off the cuff, announced this event out of a reaction to a Reuters report about a discontinued low-end vehicle. And so I think that was hastily planned, but they typically or sometimes delay these events, but they always, and I choose that word carefully, delay product announcement or product launches and the subsequent ramps. And if you look at that breadth, is eventually they will get acceleration from these products. As far as FSD, that undoubtedly is still this question that is begging, that's been delayed. Elon famously in 2017 said that FSD would be available by the end of the year. And at their first AI event, he talked about 1 million robotaxis in 9 months. So it's a non-event, David, because this is a very well-traveled road. And ultimately, the reason why the stock is rallying back here is investors are asking a simple question. Do they believe that transportation eventually is going to have an autonomy angle to it? And what is Tesla's position? And my view on that is absolutely, in the future, transportation will be autonomous. And I think Tesla has a pole position in terms of capturing that opportunity.
So it doesn't matter as much as whether it's coming. It doesn't matter as much as when it's coming, Gene. I mean, I would think for a discounted cash flow model or anything else you want to sort of try and determine value, you've got to have some date in mind where this is going to actually begin to contribute to revenues and cash flow.
You do, and it's probably 27 or 28, and I just want to put some context. You mentioned earlier about the potential for this stock to double. Right now, the company is going to do about $100 million in revenue. By 2027, that will be about $100 billion. By 2027, that should be $170 billion. An 8.5 multiple on that, that's a similar revenue multiple that Apple gets, kind of yields a double from here. But I think that that's kind of the year that investors should be focused on is 2027, which means we're probably a year away from fully discounting that. But keep in mind that 2027 benefits from 2 factors. First is accelerating demand for vehicles, whether it's for consumer-owned vehicles or fleet vehicles. And separately, and more importantly, of course, is margin expansion. I believe that autonomy is a killer app when it comes to transportation. I think that they will have higher margins because of that. So to answer your question, David, I think it's 2027, and I think that's going to get progressively discounted in the stock over the next year.
What about the humanoid robots? How do you factor that into the valuation, total addressable market, and potential for profitability, or is it just too early?
It's not too early for investors who have a 5-year time window. And think of this as the AI cake. There's 3 layers to it. The first is just FSD. The second layer, I said, that's probably 26, 27. The second is fleets. That's probably 27. And then the frosting layer, the sweetest layer on that is Optimist. At this point, it is an eye roller, a potential punchline of a joke for many investors, but Optimist does hold an opportunity that could create more value than the collective business altogether. And when you think about the concept of really automating work across the board, I think that that is a massive opportunity. This is still an $800 billion company. There are $3.5 trillion companies that I think are doing less to advance humanity. And so I think that Optimist should be part of the conversation, although it's not today.
Yeah. He's also doing a lot of planning at SpaceX, apparently, for life on Mars. Gene, while we have you, just a quick diversion to Apple, because it's a name, my God, you've spent so much time on our air talking about over these last years. Give me a take, sort of, on the current quarter and the cycle and what lies beyond.
Current quarter, the street's looking for about 3% growth. That's for the June quarter, I should say. Because of the strength in China in the last 2 months, you should see a little bit of upside to that, call it 4% growth. We'll see accelerating growth again in September, December, and calendar year next year. As far as the cycle, the question comes down to is how potent are these AI features going to be? Samsung this week revealed some data around their Galaxy AI. They said their circle to search AI feature, 55% of users are using that on a weekly basis, and their annotated image is 23% usage. That is far more than what they expected. The bottom line is this is going to create a boom in demand for Apple devices. It's going to take probably 6 quarters to build that momentum, but this is probably the most exciting 6 quarters of iPhone that will be emerging related to really opening up AI to the masses.
Alright guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. Today Gene was talking about Tesla and how it could double, and then they were talking about Apple. So we'll briefly break down both of those stocks. If this is your first video, the green line is the 200-day moving average and the blue line is the 45-day moving average. Right off the bat, you can see Tesla has gone on a massive run. Yesterday we had almost an 11.5% sell-off, and now today from the very lows we're up 8%. So we are having some massive swings, down 11.5, up 8.5. There's no telling where we go from here. This is obviously pretty bullish. We're still towards the upper end of the range. We do have some resistance areas up here at 258, 275, and 295. It coincides with these tops over here where we got rejected several times. Now that we have broken out of this multi-year descending trend line, we're looking like we're going to come back and test it, make it some support before we keep going higher. We could be strong enough to hold this move, keep consolidating around here, and then head back to the upside. It really just depends on how hurt the investor's confidence after this delay. As of right now, I have not bought back in. I'm expecting it to go lower in the short term, somewhere back to 230. This morning it was at 233 was the low. So somewhere around 230s, 225s, 220, somewhere in there would be right at this descending trend line. Make it a nice support since it's been resistant so many times, and then blast off to the upside. He's calling for it to double, which at $250 a share would be $500 a share by 2027, guys. So that's pretty bullish. On to Apple. It has been an absolute rocket ship. It was called the dead one for so long. This stock was treading water for 2 years, just completely sideways, lost all hype. It used to be the best stock in the market. Everybody knew it, everybody loved it, everybody owned it. But these last several years, it has definitely fallen out of favor. But man, has it made it back in these last few months. We had this huge initial breakout in the stock when they explained how they were going to integrate AI into the iPhone. And we've been going up ever since. And we're even almost at all-time highs again, guys. Even when the market was selling off heavy today, we're almost back at all-time highs. Apple is looking extremely bullish. We tried to sell off yesterday, it completely rejected it and is back towards the highs. The only thing I will say is we are very extended from this 45-day moving average and even farther from the 200-day moving average. So at some point you can see price action does come back and test these moving averages. So the farther we get away, the nastier the move is going to be back to them. But as of right now, you don't fight the trend and we're definitely bullish. I hope you guys enjoyed the video and the breakdown. If you did, smash that like button and subscribe if you haven't already, and I'll see you in the next one. Peace.